Hello everyone, hope you are all doing great. So today we are gonna add some stuff to the structure chapter. So in this video we will see the weak, strong, high and low in the market. In the market we are able to identify which highs and low are weak or not. There is few rules that will be used to find them. So first of all I will explain to you how we can find out which is the strong or which is the weak. And after I will show you the rules and this will make big sense. So here on the example we are on a bullish trend, okay? And here for now we don't have any form of low in this bullish trend. We have to wait that the low is formed. But for a low formed, we need a break in the structure. So once price will break this structure with a candle close depending the time frame, this will become the strong low. Why? Because this is the low that the bank will protect if they want to pursue the bullish trend. So here this will be a new strong low. And in a bullish market we will see that each high are weak. And once the low is formed, the low becomes a strong low. So it means that this high will tend to fail and this low will tend to hold. So it's very important to know that, because it can very help you in your structure. Because for example, if now here price, we are in H4 on this leg, and if price comes back here but don't give a candle close, you will think that this low is protected, but we don't have a candle close, so this low is not protected yet. This low can become liquidity, or even this one can become liquidity for another block below. So price can make something like that, so react from here possibly, react from here possibly, or react from just below, and after make a big push that will break the structure with a candle close. And this big push will show us where is the new strong low in the market. And still the bank want to remain the bullish trend, the low will be protected. And it's possible that you have a low that is protected. So for example here you have a candle close. We'll just delete that. And after price in H4 make a wick to get out the people who are there, and after rebreak. So it doesn't mean that the low is broken, because it's only by the wick, but sometimes it's rare, but sometimes it can happen on the market. And I think it's good to show you that it's not always as it has to be. Okay, so now we will be able to see the different rules for a weak, strong, high and low. So one, if a high fails to take out a low, the high becomes targeted. So here, the high here fails to take out this low, so this high becomes targeted. So here we are in the H4 leg, and here you can have an M15 POI, which you can trade from and take a trade until the next structure. If a low fails to take out a high, the low becomes targeted. So this is why I explained you before. So for example here, if price make a wick but not a candle close, the low will fail to take a high, so the low will become targeted. So this will be the low, or I sometimes follow this one because it gives less risk reward, but I don't like the counter trend trade, so I prefer get out as fast as possible, but the low becomes targeted. So this low becomes targeted because it will be liquidity. So 3, if a high is successful in taking out a low, the high becomes protected. So for example, if now we have something like that, so if price here don't break above this breaker structure here, and break the structure here, the strong low to the downside, this high will become protected because this high taking out the last strong low in the market. And fourth, so if a low is successful in taking out a high, the low becomes protected. So here is the example. So if a low is successful in taking out a high, the low becomes protected. This concept is applicable on each time frame. So it means that if here, yes, you are bullish in H4, but if here you turn bearish in M15, this concept is applicable on the M15. So if here you have something like that, you have your church and your boss, so this high will become protected. After this high will become protected, but at a certain point you came in a H4 demand that delivered the price, and the high time frame picture always will be more powerful than the lower time frame. It's a very nice concept, but it's not something that you have to take at 100%, because yes, sometimes price will need to take some liquidity and will take out a strong level, and after will continue its trend. So this is something to add to your trading and to work on it, and you don't need to necessarily use it, but you have to test it and see if it works with you. Okay, everyone, I really hope this video helps you. So for the schematic, I will make also a bearish schematic, but for the video I don't want to make a big video where I explain the same stuff in a bearish trend, so I will just make a schematic for that, and I will make also an application video about that.